Hey everyone, Nick Shaheen here looking at Zoom. It's a bad day for Zoom, down to 3%. Somebody messaged me, do we buy the dip? And I was like, what dip? I have to squint to see it. So 2-3% down after in these stocks, the anointed COVID stocks doesn't qualify as a dip. But let's look at the levels. I think the last time I did this video was somewhere around here. It was struggling with finding footing, and I laid out the opportunity and for both pros and cons, and I said I don't know which way it's going to break out, down or up. I suggested long trades that would still survive this by selling puts, and conversely I said if they break out, which they eventually did, the target would be somewhere around above 280, whatever I eyeballed that. So I believe the upside came, and it had that little jag, but then came back up going into earnings. So let's look if we can guess as to where can I catch this falling knife. First of all, if you want to search for headlines as to why it's falling, I don't usually ask why. I just look at the chart to see where I can catch it if I want to catch it. But let's talk fundamentals. Why? It's because apparently they're having a system-wide down day. Not good if schools depend on it and they just came back to school. So usage, drainage, which is part of my problem with Zoom. They had such an explosion in usage metrics, but it's time for them to come up soon enough, not like deadline, to show that they can convert it into dollars. Back to school should be like the biggest reason, right? Because the schools are fools with spending. For me, like, do you see apples in schools? It's like, what? You can buy 10 PCs or Chromebooks for the price of one apple, basically exaggerating. But so they don't mind spending, so they pay up for Zoom. There are so many other free alternatives, but I don't know if you can implement the free for school, so they may be heading to Zoom. We'll find out soon. When? Here. They should show us, okay, all these extra millions of people using Zoom, some of them are actually going to pay. I will never pay, but somebody might. So, is this a time to panic? Definitely not, because it just broke out of a level, somewhere around 280, and then, it's okay to test the footing for it. Technically, it should be headed higher because they had some sort of a consolidation zone after a big rally. So they rally big time, they shake a few trees, consolidate, and now the bulls get confident that they have a good solid base below them. Boom, they explode higher for another leg, probably as big as this. So as much as I want to short it, I don't want to short it on a bad day, like a 3% down. So this is a daily chart. It doesn't tell us a lot. If you want to see metrics, since we're still talking fundamentals, this is not that scary. 1700 PE, at least they have an E. Some don't have anything here because they lose money. So this is good news. This is horrible news, the price to sales. This tells me that there's about 118 years worth of sales, current sales, priced into the stock price. So I get it that people have hope for the upside, but let's consider comparing it to other, quote, expensive stocks. How about Shopify? Shopify is in the 70s. So this is almost, this a lot more expensive than Shopify. Okay, another expensive stock. Quick. What? Amazon? Okay, we'll go with Amazon. Amazon's 6. This is 118. For Amazon, how good is the company? Explosive growth, year over year, 28% over 5 years at least. This year, 42%. So it's no slouch. And this is growth of money, not growth of usership, like fake money. Money soon to come. This is growth of top line, money. And deliver a profit. Only sells at 5.6 times its full year sales, Amazon. And this guy wants 118, not with my money. I would trade it via puts, selling puts, to leave a lot of room for error and generate profits off of the big fans of it. Yeah, I don't want it, but I don't mind helping people out by selling puts out there. Those who want to short it. So selling a put is bullish, by the way. Okay, from a price action perspective. All right, so let's drill down and take a look at 2 hours, if we can get some smarts out of this one. This tells me that it has several little support levels. 270.5 is one of them, if I want to be honest there, as far as leave some room. Technically there's this one and that one, but how about leaving a few pennies there? These are fast movers, so the whole zone, if I were to around 270, should provide first level of support. Let's say the poop hits the fan tomorrow and this problem with the operational thing and not being able to access it gets worse, then there's plenty of support below it. One level that sticks out is 260. I know it's a round number, but that's what the chart is showing me. If I look left, this has been a place where they've fought over it before. And then 251, 252. Okay, call it fill the gap all the way to 245. They don't need to do that. They have a point of control right here and a whole bunch of consolidation. So this is, I don't know, a month. It's not a long time, but there has been a lot of consolidation. So the bulls are emboldened. But it starts to look like a head and shoulders if they bounce a little bit and fall, this way, neckline falls. Regardless, there are so many levels of support that to start chasing it short from here is hoping for more bad news. And I'm not sure that there's going to be that many sellers because people are just grabbing crap these days, absolute crap, but they love it. So who am I to tell them no? What I can do to catch a falling knife is sell a put spread or puts. So if I know it's going to hold this level, I can sell risk down here, and then time will do the work for me. The risk will die out, and whoever bought that lottery ticket from me will lose money. So the idea is to sell losing lottery tickets for these people. So this is a 15-minute chart. So now we're getting more granular. Now you can almost see the neckline for that, some sort of a head and shoulders. So if I were to do this, for example, this is not quite, I know there's somebody in the room or watching this and say, I'm a technical analyst, is this a horrible neckline? Could be, but I've seen it work enough time that the spirit of it, when you attack a neckline that many times, it better hold. If it doesn't hold, it's going to take down. Technically, it should be about as big as this. But before I do that, I look left and I can see that there's going to be a fight over this line right here. And probably there's be something, let me see, what is there here? What is that number? 260? Right there. So this was a place from which they broke out before. This is pretty important. Big fail. And then they completely took it out. They tested it for footing. They went out. Small consolidation. Broke out. Tested it for footing. And here we are. So neckline after neckline after neckline after neckline. One step at a time. Breakout to the upside. I would chase a breakout above here. So you can put a line and chase the breakout of the trend line. I like to break out from levels. That's a pretty freaking awesome looking doji. What's a doji? It's indecision. The market doesn't know what to do with it in this time frame. What is this? 15 minutes. They opened. They tried to spike it. They tried to fail it. They didn't know. They said, the heck with it. Let's just close it exactly where it was. So 291.80, 291.40, 50 is important, just as this is. So pick your trigger line. I don't like to trigger off of this because this could be the fake out. Like, oh, let's go. And then, no, let's not. Because they didn't know back here. They definitely didn't know here. So onus is on the bull to take both of them out. My opinion. Same as if they lose this, I should look at it. I don't have a trade in it right now, but if I were long, I'd want to know that it's losing this level. It has several levels here, but I still want to be heads up on it and not be taken out. All right, so this is my opinion on Zoom. No emotions. I really don't hate the people or the stock. I used it this weekend. I did a class for somebody at one-on-one, and I used it this weekend. But it's free. I did not pay for it. I use it on Sunday. I do bigger classes for like 40 to 100 people, and I don't use it. I use something else that's also free. It handles heavier volume, and they don't have restrictions on time limits or anything like that. So there are alternatives. That's my beef with the theory of it's like the only horse in town. It's not. There are plenty of other horses running with it. Not to mention Google. When I turn on my Gmail, two big buttons on the bottom. One is Gmail, the other one is Meet. You click on it, set up your meeting, boom, done. Quick and easy. So there are alternatives. So anyway, the stock is what it is. I don't get involved with it emotionally, but it trades really well. And if you know some sort of technical analysis, or at least how to read a chart, I'm not a technical analyst. Trust me, I'm an engineer who was a businessman and just learned all this stuff by myself. But it does work. The more machines trade, the more the stuff works. Look at this. Okay, I'm glad I changed time frame. So this is 1 hour. Look at my orange line. That was the trigger I just set with you guys, right? I just set this. Look at where it came out. You think that's a coincidence? No, because I used this data and then I zoomed out and this showed up. Look at this. That's the same level. So clearly that's an important level for traders, give or take. All right. It works, people. You just have to be diligent with it and realistic and take the emotions out of it. Nick signing out. Subscribe to the channel if you don't. Also, there's a chat room live all day, every day. We do this. There's a link to it in the description down below. It has a PayPal thing on it, but the transaction is 0. It's free to try out. I just need to shake out all the spam, and I just want to know that it's a real person to protect my community. So hit it. Nick signing out.